So I've been in finance for over 30 years, and one of the things that I see all the time is that people wait until the last minute. They don't start early. So what will probably happen is as your mortgage approaches the end of its term, you'll get a letter from the lender. Some people read it, some people don't, some people panic right away. But what you want to do is speak to a broker as soon as that letter lands, or if you know within the next 12 months your interest only mortgage is coming to full term, reach out to a broker. Knowing that you have options is very important. You don't want to be stressed or pressured because when you received that letter saying that your interest only mortgage was coming to an end, you didn't act. You waited until it got past the due date. And then the lender is now saying, look, we need our money, or we're going to have to sell this property, or potentially legal action. You don't want that to happen. And it is entirely avoidable if you act early. Do not delay, do not wait. Questions that you need to ask yourself. You're going to want to ask yourself a few questions. You probably know that you're on an interest only mortgage, and you probably know that you've taken it out 15, 20 years ago. But what you want to understand is when your mortgage ends. You want to understand how much you owe. Hopefully, if you're like a lot of my clients, you've purchased a home 20 years ago, interest only, and you purchased in London. So the property value is shot up. This means that you have a lot of equity in the property. Some people understand what equity is, some people don't. So let me explain what equity is, or loan to valuation. So equity is the difference between how much your house is worth and how much you actually owe on the property. So if you bought a house in London, in one of these areas that has seen huge growth, maybe you bought it for 250, 260,000. Then it's appreciated or it's gone up in value. So maybe the house is now worth 500,000. The difference between the amount that you owe and the amount that the house is worth is your equity. This equity is just living in the bricks. As a friend of mine says, you can't pull a brick to buy a loaf of bread. So that's to say that money is stored in your home. So now that your interest only mortgage is coming to an end, it might be a good time to access some of that money, not only to pay off the current mortgage, but potentially to purchase a new home. So there is a strategy that I will be going through. Make sure that it's something that you listen to, because not every strategy is right for everybody. But what you're going to want to consider is, can you afford the repayments as you move forward? That's a question you should ask yourself. What if you stopped working tomorrow? Our bodies are not designed to work forever. So if you have a very physically demanding job, you do need to think about how much longer you can realistically work. And as I said, you want to consider how much equity that you have. Here's a real world example of how I was able to help one of my clients. So I had a client who came to me after his lender had started contacting him about his interest only mortgage. He'd built up a significant equity in his home, so he had a lot of money in his home, so it was valued way more than he owed. And he assumed his only option was to sell the property. But I told him, you don't have to sell. In fact, after reviewing his circumstances, we explored an alternative approach. Instead of simply selling the home, what we ended up doing is refurbishing the home to add some value to it. He then converted that into a buy to let property, took out some equity while we were doing the buy to let property, purchased another home that he could live in, and rented out the house he was living in before. Again, this won't fit everybody. Not everyone's going to have enough equity, and not everyone's going to want to do that. But it is something for this client, it was the right thing. So what happened? We were able to put him in a position where not only did he keep the home that had all the family memories, he was able to convert that to a buy to let, take out some equity, and then buy another home. So now in his retirement, he has income from the other property. He also has an asset that is appreciating or going up in value. So it was a great solution for him. That solution's not going to fit everybody, but a great solution for him that he hadn't even considered. He didn't even know that it was an option. 5 things that you can do right now. So these are 5 things that if you're on an interest-only mortgage, you should be doing right now. Find out what your mortgage statement says. So look at your mortgage statement, see when the term ends, see what the interest rate is, and see how much you actually owe. Check the mortgage end date, check your outstanding balance, check the value of your home. My best advice is always don't go by what Rightmove and Zoopla are telling you, or even maybe an estate agent. So the figures that you see on Rightmove, Zoopla, and all of these online platforms, especially now at the airing of this video, those figures are usually quite high compared to what banks come back with when we do the valuation. So check the value of your home, that you know how much equity you have in your home, that if you're considering any of your options when your interest-only mortgage comes to an end, if you know your equity in there and you know what the numbers look like, you can then assess your options a lot better. Speak to an advisor, speak to a professional from now. Don't wait until the last minute when the lender is contacting you. Speak to someone early. And here's why you should speak to a mortgage broker first. Understand and assess your affordability. A good mortgage broker is going to get your income, your outgoings, and assess what you can actually afford. And therefore, they'll be able to assess if you meet the criteria for each individual lender. A good mortgage broker is not going to do that through running applications through those lenders, but instead they'll be able to look at the criteria to see what lender is best for you. This means that you're not going directly to your bank. You're not going from an appointment to appointment. You're speaking to one person who's able to look at the criteria and find you the very best deal. This is going to save you money. This is going to save you time, and this is going to save you stress. It can be really stressful when your interest-only mortgage is coming to an end and you're getting letters and they're suggesting that you sell the property. It can be really stressful. So a good mortgage broker is going to be able to help you avoid that stress and make things a lot smoother, that you can make an informed choice.